In this part, I will explain regarding the monetary policy in 2020. In 2020, Malaysia has experienced a severe economic downturn due to COVID-19 pandemic. During this period, many businesses, especially the tourism and transportation sector, had to close and reduce their operations. Thus, many people has lost their jobs and the Malaysian GDP has also affected. In order to reduce the impact of the pandemic, Bank Negara Malaysia has implemented several monetary policy measures. The main action was to reduce the OPR from 3% into 1.75% throughout 2020. Lower interest rate reduced borrowing costs, making loans more affordable for both household and business. Besides that, B&M also introduced a 6-month automatic loan moratorium, allowing eligible borrowers to temporarily postpone their loan repayment. This will help the household to manage their daily expenses and give the business more time to maintain their cash flow and continue operating. Overall, this monetary policy helped to reduce the financial burden on household and business, maintain the financial stability, and to support Malaysia's economic recovery during the COVID-19 crisis. Meanwhile, in 2021, Malaysia has continued to face economic challenge due to the new wave of COVID-19 infections and the implementation of additional movement restrictions. Although the national COVID-19 vaccination program helped to improve the situation, the recovery was still uneven. Some sectors, such as tourism and aviation, were still recovering slowly, while many businesses continue to face lower demand. To support the recovery, Bank Negara Malaysia has maintained the OPR at 1.75% throughout 2021, keeping the interest rate low reduced borrowing costs, allowing the household and business to continue access the affordable financing. This encouraged consumer spending, business investment, and overall economic activity during the recovery period. Other than maintain the low OPR, B&M has also continued provide financing support, especially for SME, and introduced target repayment assistance for borrowers who were still affected after the loan moratorium ended. This helped business rebuild their operation and led the household to manage their financial commitments. Overall, B&M accommodative monetary policy in 2021 has supported Malaysian economic reopening, maintained financial stability, and strengthened confidence among the household and business as the country gradually recovered from the COVID-19 pandemics.
Hello everyone. For my part, I will discuss how Malaysia's monetary policy changed during the economic recovery from 2022 to 2023. During COVID-19, Bank Negara Malaysia kept the OPR at 1.75% to make borrowing cheaper and support households and businesses. By 2022, economic activities restarted, business reopened, and consumer spending improved. As the economy recovered, BNM shifted from crisis support to policy normalization by gradually raising interest rates to a more appropriate level. The goal was to support the recovery without showing economic growth too much. Malaysia's recovery in 2022 was supported by several factors. The reopening of international borders and the easing of movement restrictions helped sectors like tourism, retail, transportation and hospitality recover. At the same time, the labour market improved as businesses resumed operation, giving the household more confidence to spend. However, the recovery also brought inflationary pressure. Food, transportation and production costs increased due to global supply chain disruption, higher commodity price and the Russia-Ukraine conflict. As a result, BNM had to balance economic recovery with rising inflation, which was why the very low OPR was gradually increased. At the start of 2022, BNM kept the OPR at 1.75% because the recovery was still uncertain. From May to November 2022, BNM raised the OPR 4 times, reaching 2.75%. In 2023, the rate stayed at 2.75% until May, when it increased to 3% and remained there for the rest of the year. Overall, BNM increased the OPR 5 times, with each hike 0.25 percentage point, showing a gradual approach to control inflation while supporting economic recovery. There were several reasons for the OPR increases. First, the economy was recovering. More sectors had reopened, employment improved, and spending increased, so the emergency pandemic interest rate was no longer needed. Second, keeping interest rate too low for too long can encourage excessive borrowing by households and businesses, creating financial risk. Third, higher interest rate had managed demand by encouraging people and businesses to spend and borrow more carefully. Although higher OPR cannot solve global issues like rising oil price or food shortage, it can reduce demand driven inflation. The goal was not to slow economic growth, but to support a more stable and sustainable recovery. In 2023, Vietnam adopted a more cautious approach than 2022. The OPR remained at 2.75% in January and March because monetary policy takes time to affect the economy. Households and businesses need time to adjust their borrowing, spending, and investment decisions. In May 2023, Vietnam raised the OPR from 2.75% to 3%, returning to its pre-pandemic level and reflecting confidence in Malaysia's economic recovery. The OPR then stayed at 3% for the rest of the year, as PNM considered this level appropriate for balancing economic growth and price stability. Inflation had become more manageable, reducing the need for further rate increase. Overall, Malaysian monetary policy in 2022 and 2023 was gradual and cautious, with BNN normalizing interest rate while supporting stable and sustainable economic growth. So that's all for my section. I will pass to the next presentation.
Assalamualaikum and good day everyone. Today I will present regarding Malaysia monetary policy during 2024 to 2025. First, monetary policy refer to the action taken by Bank Negara Malaysia to manage the country money supply and interest rate in order to achieve economic stability. The main monetary policy tool used by BNM is the by OPR. The main objective of monetary policy are to maintain price stability, support sustainable economic growth, and ensure financial stability. Looking at Malaysia's economic performance, the economy remained resilient during 2024 and 2025. Malaysia GDP grew by 5.1% in 2024 and is forecast to grow by 5.2% in 2025. At the same time, inflation remained moderate, decreasing from 1.8% in 2024 to 1.4% in 2025. This positive performance was mainly supported by strong domestic demand, higher household spending, and the continued recovery of the tourism and service sector. Next, let's look at the OPR decision during 2024 and 2025. Throughout 2024, BNM decided to maintain the OPR at 3.0% because the economy remained stable and inflation was under control. Similarly, from January to May 2025, the OPR was also maintained at 0.0%. However, on 9 July 2025, BNM reduced the PR by 25 basis points from 3% to 2.75%. This decision was made because inflation remained low, while the economic outlook became more moderate due to increasing global uncertainty and weaker external demand. By lowering the OPR, BNM aimed to reduce borrowing costs, encourage spending and investment, and continue supporting Malaysia's economic growth. Finally, let's discuss the impact of the monetary policy. For households, the lower OPR reduced financing costs, increased disposable income, and encouraged consumer spending. For businesses, lower borrowing costs improved cash flow and encouraged companies to expand their investment. At the national level, the policy had supported economic growth, maintained stable inflation, and strengthened financial stability. In conclusion, BNM maintained a stable monetary policy throughout 2024 before implementing a preemptive OPR reduction in July 2025 to support the economy. Overall, Malaysian monetary policy remained flexible, balanced, and data-driven, helping the country achieve sustainable economic growth while maintaining price and financial stability. Thank you.
We look at the effectiveness of Bank Negara Malaysia monetary policy from 2020 to 2025. Over these 6 years, the economy faced massive shocks. We will see how the central bank had to constantly adapt its strategy, moving from emergency cash support during the pandemic to quick interest rate hike to fight inflation, and finally shifting to protect our economic growth. Before checking the timeline, we must understand the core rule of monetary policy. Changing interest rate is great for controlling local spending and credit. However, it cannot fix supply side problem. For example, rising interest rate cannot fix broken global shipping lanes, domestic labor shortage, or high oil price caused by wars. During the COVID-19 lockdown in 2020, the economy almost stopped. B&M saved the financial system by cutting the OPR rates to its lowest ever 1.75%. This move pumped 13 billion ringgit into banks, lower monthly loan repayment, and keep thousands of small business from going completely bankrupt. However, this rescue plan hit a strict limit called a liquidity trap. Even though loans were super cheap, business could not invest and households chose to save cash because they were afraid of the future. Leaving rate low for too long also meant too much money was left floating in the system, which later triggered high inflation. By 2022, lockdowns ended and spending surged. At the same time, global conflict and supply issue pushed price to multi-decade high. To tame this demand pull inflation and protect the value of the ringgit against US interest rate hikes, B&M raised the OPR back up to 3% by mid-2023. This tightening worked well to stop domestic overspending, but it could not fix supply-driven inflation. Higher interest rate cannot make imported food or fuel cheaper. As a result, everyday Malaysia faced a tough double squeeze. This had to pay more for basic goods while also facing higher monthly bank loan payment. By 2024 and 2025, global trade become weak. To protect Malaysia, B&M shifted from fighting inflation to supporting economic growth. In July 2025, they proactively cut the OPR to 2.75%. This kept credit flowing smoothly to business, allowing Malaysia to achieve a strong 5.2% economic growth in 2025. To conclude, the last 6 years prove that interest rate alone cannot solve structural economy health. B&M monetary policy must run hand in hand with government fiscal action like tax reform and target subsidies.
Next, we will talk about challenge and current issue of monetary policy from 2020 to 2025. One of the biggest challenges faced by the Bank Negara Malaysia during 2020 until 2025 was the increase in global inflation pressure. So after the COVID-19 pandemic, many countries experienced supply chain disruptions and shortage of raw material and higher transportation costs. Next, the second challenge was the tightening of monetary policy by major central banks, especially the United States Federal Reserve. When the Federal Reserve increased their interest rate, many international investors shift their investment from emerging economy to the United States because of the higher returns. Another important issue was the rising cost of living faced by the Malaysian household. The price of essential goods such as food, housing, transportation, and utilities increased during this period, placing greater financial pressure on consumers, especially low and middle income families. Bank Negara Malaysia is expected to continue facing several challenges. This also include global economic uncertainty, geopolitical conflict, and change in government subsidy policy and fluctuation in commodity price. All of these factors can affect inflation, exchange rate, and overall economic growth. Therefore, Bank Negara Malaysia will factor can Bank Negara Malaysia will continue to adopt a flexible and data-driven monetary policy approach. In conclusion, monetary policy played an important role in supporting Malaysia economy throughout the period from 2020 to 2025. During the COVID-19 pandemic, Bank Negara Malaysia implemented expansionary monetary policy to support household and business. As the economy recovered, the central bank gradually increased the overnight policy rate to control inflation while maintaining sustainable economic growth. Despite facing global inflation, exchange rate volatility, and economic uncertainty, B&M adopted a flexible and data-driven approach to ensure macroeconomic stability. Moving forward, close coordination between monetary policy and fiscal policy will be essential to strengthen Malaysia's economic resilience and achieve long-term sustainable growth.